Welcome to our fascinating documentary about the life of one of the most influential investors of our time, Warren Buffett, the Oracle of Omaha. Join us on an inspiring journey through his life, from his humble beginnings to his position as one of the wealthiest people in the world. Discover the principles and decisions that made him who he is today.
Insights for the Informed Investor.
Chapter 1. The Humble Beginnings of the Oracle of Omaha. Warren Buffett, known as the Oracle of Omaha, was born on August 30th, 1930, in Omaha, Nebraska, and grew up in modest circumstances. Even as a young boy, Warren displayed a remarkable flair for business and entrepreneurship. At just 6 years old, he bought packs of chewing gum for a few cents and sold them for a profit in his neighborhood. Soon after, he expanded his business and began collecting, cleaning, and selling used golf balls at a profit. Stamps and even pinball machines placed in local stores were also part of his early business ventures. He was fascinated by the world of numbers and commerce from a young age, and quickly developed a deep understanding of how to turn small opportunities into profit. Another example of his early business acumen was when he delivered newspapers in his neighborhood, generating a steady income. These experiences laid the foundation for his later career as an investor and entrepreneur. Chapter 2. The First Steps in the Financial World. At the age of 11, Warren Buffett made his first foray into the stock market by purchasing 3 shares of Citi Service Preferred at $38 per share. This was not just a financial transaction, but a defining moment that marked his entry into the world of investing, sparking a lifelong passion for finance. He carefully observed the movement of the stock, and when it rose to $40, he decided to sell, making a small profit of $2 per share. However, what followed taught him a profound lesson. Shortly after he sold, the stock price soared to $200. Witnessing this significant increase after he had already sold left a deep and lasting impression on him. It was an early but critical lesson in the value of patience and long-term thinking. This experience profoundly shaped Warren's investment philosophy. He realized that the true potential of investing lies not in making quick profits, but in understanding the value of an asset and holding it until that value is fully realized. Patience, he learned, was not just a virtue, but a critical component of successful investing. The incident with Citi Service Preferred taught him that reacting too quickly to short-term gains could lead to missing out on much larger opportunities. It became clear to him that the market's fluctuations are often temporary, and that true wealth comes from the ability to endure and wait for the right moment. In the years that followed, Warren internalized this lesson and applied it rigorously to his investment strategy. He began to understand that successful investing was not about timing the market, but about time in the market. This approach would later make him one of the most successful investors in history. He developed a disciplined mindset focused on the long-term growth of high-quality assets, often saying that his favorite holding period for a stock was forever. Warren understood that the best results come not from chasing quick returns, but from holding quality assets and allowing them to grow over time, regardless of short-term market volatility. This foundational experience at the young age of 11 set the stage for his entire career, emphasizing the importance of patience, conviction, and the power of compound growth. Chapter 3. Education and Mentors. After high school, Buffett began his studies at the University of Pennsylvania before transferring to the University of Nebraska to be closer to his family and finish his studies faster. He graduated from the University of Nebraska with excellent grades, which enabled him to take the next big step. However, the real adventure began for him when he studied at Columbia University, where he was taught by Benjamin Graham, one of the pioneers of value investing. Graham was already a legend on Wall Street at that time, known for his groundbreaking book Security Analysis and the intelligent investor, which defined the principles of value investing. Buffett was fascinated by Graham's philosophy of investing in undervalued companies with solid fundamentals. Graham became not only a teacher, but also a mentor and role model for Buffett. He taught him the principles of value investing, which stated that the true value of a company often far exceeds its current market value if it has a strong financial foundation and a stable business model. These lessons shaped Buffett's approach to investing and became the guiding principles of his later career as an investor. After graduation, Buffett even worked for a time at Graham's firm, Graham-Newman Corporation, where he gained valuable practical experience. This time profoundly influenced his perspective on financial markets and laid the groundwork for his future success. Chapter 4. Founding Buffett Partnership, liability. In 1956, Warren returned to Omaha and founded Buffett Partnership liability, with an initial capital of $105,000 that he raised from family and friends. He began to implement his investment strategy. Buffett had an extraordinary ability to identify undervalued companies with tremendous growth potential that other investors often overlooked. His strategy was to invest specifically in these companies while following a highly disciplined approach. He meticulously analyzed business models, balance sheets, and management teams to ensure that his investments carried low risk with high potential. This thorough analysis and his trust in value investing principles led Buffett Partnership to generate exceptional returns, making many of his early partners financially independent. A significant turning point in his career was the discovery of the textile company, Berkshire Hathaway. The company faced significant difficulties in the early 1960s, as the textile industry in the United States struggled with increasing international competition. Nevertheless, Buffett saw an opportunity in Berkshire Hathaway that others did not. He began buying shares when the stock price was low, betting that the intrinsic value of its assets far exceeded the market price. In 1965, he took control of the company and began restructuring it. Although the textile business continued to struggle, Buffett used Berkshire Hathaway as a platform to expand into other lucrative sectors. Buffett soon realized that the true value of Berkshire Hathaway lay not into the textile business, but in its potential to serve as an investment vehicle. He began to invest the company's profits in other industries, particularly in the insurance sector, which played a key role in Buffett's strategy. Insurers such as National Indemnity and later GEICO provided a steady source of premium income, also called float, which he used for further investments. This restructuring and redirection transformed Berkshire Hathaway from a struggling textile company into a globally recognized investment empire, which today owns stakes in numerous successful companies, including American Express, Coca-Cola, and Apple. Buffett's approach of investing in high-quality companies and holding them for the long term was instrumental in the growth of Berkshire Hathaway. He built the company not only by investing in stocks, but also by acquiring full ownership of businesses like See's Candies, Nebraska Furniture Mart, and Borsheim's. These companies were chosen for their solid business models, loyal customer bases, and capable management, making them ideal additions to Buffett's portfolio. Over time, Berkshire Hathaway became synonymous with financial strength and solid, long-term growth, and Warren Buffett himself became a symbol of disciplined and smart investing. Chapter 5. The pivotal investments that changed everything. In the 1970s and 1980s, Buffett made some of the most crucial decisions of his career, which cemented his wealth and reputation as one of the most successful investors of all time. One of his most notable investments was in the Washington Post. He acquired a significant stake in the company at a time when many investors were skeptical. However, Buffett saw the company's potential and its ability to be profitable in the long term. His investment brought him not only enormous financial gains, but also a close personal relationship with publisher Katharine Graham, who later described him as one of her most important supporters. Another major decision Buffett made was his investment in the insurance company GEICO. Buffett had been fascinated by GEICO since his time studying under Benjamin Graham, as Graham himself was chairman of the company. In 1976, when GEICO faced financial difficulties, Buffett saw an opportunity to invest massively. He believed in the company's long-term stability and potential. This investment more than paid off later and made GEICO one of the crown jewels in Berkshire Hathaway's portfolio. However, Buffett became particularly well known for his investment in Coca-Cola in 1988. At that time, Berkshire Hathaway bought shares worth $1 billion, which represented about 6.2% of the company. This was one of the most profitable decisions of his career. Buffett recognized the immense potential of Coca-Cola as a global leader in the beverage sector and as a strong brand with a sustainable competitive advantage. Coca-Cola proved to be a true cash cow, and Buffett received substantial dividends in the years that followed. This investment once again confirmed his talent for recognizing the true value of a company and sticking with it for the long term. Buffett's ability to identify the long-term prospects of these companies was based on his intensive analysis and trust in the quality of their business models. His decisions in the 1970s and 1980s were characterized by a deep understanding of company values and unwavering trust in the principles of value investing. These strategic investments not only helped him grow his wealth exponentially, but also made him a role model for generations of investors who have adopted his principles of patient and disciplined investing. Chapter 6: The Humble Billionaire. Despite all his success and growing wealth, Warren Buffett remained remarkably humble. He continued to live in the house in Omaha that he bought in 1958 for $31,500. The house, a simple, cozy, single-family home, was never modernized or lavishly furnished, but remained modest and functional. Buffett had no interest in large mansions or opulence and lived, as he believed, humbly and down to earth. In other aspects of his life, he also remained true to his simplicity. He drove a modest car for decades, only replacing it when it was truly necessary. Another example of his humility is his love of fast food. Buffett enjoys simple meals, like burgers, fries, and cola. He frequently visited fast food restaurants like McDonald's and stuck to the daily habits he had maintained for years. His office in Omaha, where he managed Berkshire Hathaway's billion-dollar businesses, was also modestly furnished. There were no elaborate decorations or luxurious furniture, just a functional work environment that allowed him to focus on what mattered most. This modesty in his lifestyle made Warren Buffett an exception among the super-rich and a role model for many people worldwide, who saw it as proof that true greatness is not achieved through luxury, but through humility and focus on the essentials. But Buffett's true greatness was shown in his commitment to the welfare of others. He recognized early on the responsibility that comes with great wealth and intensely considered how to use his fortune effectively for the good of society. In 2006, he announced that he would donate 99% of his wealth to charitable causes, laying the foundation for one of the largest philanthropic initiatives in history. Much of these donations went to the Bill and Melinda Gates Foundation, which works globally to improve health, education, and poverty alleviation. Buffett believed that the Gates Foundation was the best vehicle to bring about positive change on a global scale. In addition, he co-founded the Giving Pledge with Bill and Melinda Gates. This initiative encourages billionaires around the world to commit to giving away the majority of their wealth to charitable causes. The Giving Pledge is more than just a promise. It is a movement that inspires people with immense wealth to take responsibility and give back a portion of their success to society. Buffett himself often emphasizes that he finds more joy and fulfillment in giving these donations than in accumulating material wealth. His dedication and humility made him a role model for others, showing that true success is not only in personal wealth, but also in the positive impact one can have on the lives of others. Chapter 8: Warren Buffett's wealth in detail. Warren Buffett's wealth grew exponentially over the years. In the 1960s, when he founded Buffett Partnership Limited and invested in Berkshire Hathaway, his wealth began to grow into the millions. He earned money through smart investments in undervalued companies that were often overlooked by other investors, generating impressive returns. His investment strategy, based on thorough analysis and patience, enabled him to achieve steady growth. In the 1970s, he expanded his portfolio and invested in successful companies like the Washington Post, further increasing his wealth. By the end of the 1970s, his wealth was already in the hundreds of millions, and he began to be recognized as one of the prominent figures in the financial world. In the 1980s, Buffett finally crossed the billionaire threshold. This was mainly due to his investments in the insurance sector, including GEICO, and the expansion of Berkshire Hathaway as an investment vehicle. Berkshire Hathaway proved to be a perfect means to generate steady premium income, which he could use for further investments. In the 1990s, his wealth reached several $billion, primarily through strategic stakes in companies like Coca-Cola. In 1988, Buffett bought about $1 billion worth of shares in Coca-Cola, which represented approximately 6.2% of the company. This investment brought him substantial dividends in the years that followed, significantly increasing his wealth. Other blue-chip companies like American Express and Gillette also contributed to his exponential wealth growth. Buffett recognized the value of strong brands and sustainable competitive advantages that ensured him long-term, stable returns. In 2008, during the global financial crisis, Buffett was briefly the richest person in the world, with an estimated wealth of $62 billion. While many fortunes shrank dramatically during the financial crisis, Buffett was able to maintain his position due to his cautious and thoughtful investments. He used the opportunity to invest in solid companies at favorable prices during economically challenging times. Despite his generous donations and philanthropic commitments, such as his 2006 announcement to donate 99% of his wealth continued to grow. By 2023, his estimated wealth still exceeded $100 billion. This was mainly because he continued to invest in profitable companies and used the profits for further investments. His financial success is the result of decades of discipline, smart decisions, and his unwavering belief in the principles of value investing. Chapter 9. Warren Buffett's Legacy. To this day, despite his generous donations, Warren Buffett has built up a considerable fortune and remains a central figure in the financial world. His wealth was built through smart investments, strategic acquisitions, and unwavering discipline. Buffett demonstrates that with a long-term perspective, based on deep analysis and an understanding of business, significant success can be achieved. His advice to invest in what you understand, think long-term, and act with integrity has inspired generations of investors and has become universal principles in the financial world. His annual letters to Berkshire Hathaway shareholders have become legendary and are valued by investors worldwide as a source of valuable insights and wisdom. Buffett's life is a testament to the fact that true success does not come overnight, but is the result of hard work, discipline, patience, and a clear vision. Through his humility and commitment to charity, he has proven that true wealth is not only in financial means, but also in the contribution one makes to society. Chapter 10. Lessons from his life. Warren Buffett's story shows us that no matter where you come from, with passion, perseverance, and a clear vision, great things can be achieved. Buffett's success is the result of hard work, strategic planning, and a willingness to take calculated risks. He has taught us that patience and trust in long-term investments are essential to creating real wealth. At the same time, his life shows that true greatness is not just about financial success, but also about commitment to others. Buffett's decision to donate the majority of his wealth and his dedication to charity illustrate that true success is not selfish, but is about giving back to the community and improving the world for future generations. Thank you for joining us on this journey through the life of Warren Buffett. His journey shows that with smart decisions and patience, great success can be achieved, but that this success is only truly valuable when shared with others. If you enjoyed this video, please leave us a thumbs up and subscribe to our channel for more inspiring stories from the world of finance and success.